Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a report about Houston American Energy, and trust me, it's not just about oil wells and pipelines. There's something about warrants and stock that might make your head spin, but we'll break it down in a way that even your grandma could understand. This report is about how Houston American Energy just raised some money by selling stock and something called pre-funded warrants. It sounds complex, but it's actually a pretty common way for companies to get cash. We're going to unpack what that means, why they did it, and what it could mean for the future of the company and your investments. Before we start, if you find value in getting simple explanations of complex corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these filings with other investors. So Houston American Energy issued this report because something important happened. They completed what's called a registered direct offering. Basically, they sold shares of their stock directly to an investor. This happened on June 20th, 2025. Scroll closed a registered directory offering for 1,800 shares of common stock of 474,174,015 and piece of the pie. Take common stock as basic ownership in the company. Each share gives the owner a tiny piece of the pie. Now here's where it gets a little complicated. They also issued pre-funded warrants twice. A warrant is like an option to buy more stock at a set price in the future. A pre-funded warrant just means the investor paid for the warrant up front, meaning they gave the company money now with the promise of getting more stock later. They are doing this for a specific reason. The company doesn't want any single investor to own too much. The investor gets these warrants in case buying more stock would make them own more than 4.99% or 9.99% or 9.99% or 9.99% or 9.99% or 9.99% has. All of this means the company got about $237 million before they had to pay for the fees. That's a decent chunk of change. No, getting 2.37 M in cash does not mean the company is doing well. It just means they got this money. A company called Universe Securities LLC helped in setting all of this up. They found the investor and made the sale happen. They acted as a placement agent in this offering. If you're curious about more details, you can check out a previous report they filed with the SEC on June 18, 2025. That report probably provided more details about this stock offering. We don't need to do that right now. That's all for the news. Now let's get to the exhibit, specifically what lawyers are saying and what they are okaying. These are just formal parts of the filing and not very actionable for small investors, so we can ignore these. This means that the law firm of Norton Rose Fulbright US LLP is giving their legal opinion on the stock offering. It's a way of saying they looked at the deal and, in their professional opinion, everything is legal and above board. Here it is just saying that Norton Rose Fulbright US LLT is okay with their legal opinion being used as part of this public filing. Now, what does all this actually mean for Houston American Energy? Well, a few things. When a company sells stock, it often means they need more money for something. Maybe they want to expand their operations, pay off debt, or invest in new projects. The downside is that each existing share now represents a smaller portion of the company. This can sometimes lower the value of each share. It's what people call dilution. By using pre-funded warrants, Houston American Energy is trying to get money now, while also limiting how much a single investor controls. This can be seen as a good thing because it prevents any one person from having too much power over the company's decisions. However, it's also a bit complex and investors might not always like these types of arrangements. It creates uncertainty around how many shares will be outstanding in the future. Investors may hesitate because, as mentioned before, their share of the company is now smaller. Overall, this stock offering seems like a pretty standard move for a smaller energy company that needs to raise capital or money. It is neither terrible nor good for the company as a whole and is too limited in scale to draw any conclusions from. Alright, that's our breakdown of Houston American Energy's latest report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hit that like button and subscribe for more deep dives. Don't forget to check out the Discord community in the description below. Thanks for watching and see you next time.